about this. I will take some airtime to address the circular that we just issued this morning, and I want to run through that with you as well. Okay, now, in fact, when this product launched, right, they actually asked us, Nicole, which the marketing team is actually shared with us the pictures that we want to put in the brochures, okay? So they give us the brochures, retirement plan, all the senior look, all the white hair, silver hair, and everything. So they give me choose, even they allow us to, they ask our suggestions that what kind of right picture should put in this great retirement plan. So of all the pictures that we gotten, I have actually, we actually counter propose, we need to choose a plan. We need to choose a picture that assimilate young people. Now we're talking about this plan is not for the senior age, because we'll talk about retirement plan. You should be planned in early and not planned during already retired. When a person already retired, it's all about we're preserving your wealth, no longer able to take risks if you're in the retirement. So now we're selling a plan that target people at the younger ages and not target people at 60s. No, not even late 50s. No, because no longer planning. It's too late to plan already. We talk about wealth preservation that time. Okay, wealth preservations. So this planning is targeted to an earlier age when start thinking about retirement, even 40s. Okay, 40s, start 40s, maybe late 30s, people already start thinking about retirement. So this is our target market. Therefore, we need to choose a picture that, the renaissance of younger images. Okay, so now, I want to start off the day by having this quote, yeah, because, we are in this, seriously, we're in this business, we're in this line, we are surrounded by news of people getting sick, people who are getting, leaving too early, leaving the world early, people are getting sick, probably we're in this business or in this industry. So I think to each and every one of us, they're able to sit down here, able to, enjoy the talk and listen to you and are able to hear from you as well, is a grateful day. I want to start the day by saying that it's really grateful that we are still able to hear each other, okay? And every day is a new opportunity to grow. So every day, because not nowadays we're talking about leaving this world, is not about, your older age, you will leave this world. No, younger age also can leave this world. So we should, in life, we should, be grateful and count our blessing every day. That is to start the day. Okay, now, today, my objective, I have only 3. Who are our target customers? And the right customers, yeah. So number 2 is actually how this product, yeah, benefit the target market. Number 3, why there is a market opportunity for this product. I'm just covering these 3 areas. Okay, now, okay. Now we're talking about life stages, yeah, life stages, from prenatal, being a child. We went through these stages, okay? We went through these stages. Some of you is actually in your early adulthood. Some of you in your middle adulthood. Like me, I'm definitely a middle adulthood, all right? I already start thinking about retirement, okay? In fact, 3 years ago, I already start thinking about retirement, and some of you are in the late adulthood. Okay, these are the life journey, and every of these life stages, right? You will definitely have different protection needs and what is so called, give me a minute, I just want to hide this. Okay, and financial goals. When we are younger, the goal is definitely about getting the children educations. When it comes to about, the early adulthood, this is where the financial goal is different. Your goals could be buying a house, your goals is getting a better car, your goals is getting married and your children and things like that. When you're actually moving on to the middle age or near, the later on of the adulthood, the goals will change. Okay, the needs also will change. So the beauty in insurance plan is every life stages, we have product to fit in. Okay, so the first one is none other, in all ages, medical is number 1, essential needs. Number 2, okay, after having medical, you all know there is life and critical protections. It's very critical, it's very crucial. And then we'll follow by the education planning. Once all this in place, if let's say for the children, it's about education planning, then for others, it's about legacy planning, how you want to build a legacy gift for your children, or how do you want to distribute the legacy. Then we're moving on about, accumulating your wealth, all right? Okay, then retirement planning, and finally, for older ages, is about wealth preservations. So when a person's already at retirement age, right? So it's all about what kind of investment tool they're able to preserve our wealth, right? Because at the older age, the risk element have to be very, very low, because that is the wealth. We no longer have the time to most people no longer have the time able to generate income, but it's really depending on the retirement nest that we have built in the early years. Okay, now in our living, ladies and gentlemen, in our living, okay, phone is everybody will have a phone. Whenever you change your phone, let's say whenever you change your phone, you got your new phone, you're very sayang your new phone, right? Okay, so what most people will do is, because nowadays the phone, you want a good one with the AI one, you want a good quality, you want a branded one, definitely what you do, you insure the phone. Do you insure your phone or not? I did when I changed my iPhone. I'm not sure about you. Anyone who insured your iPhone? I mean, you got an iPhone, you insured or not? Because normally they say you want to tambah your insurance. Any one of you insured your phone? Anyone? Nobody, or just Nicole Vo will insure the phone? Yeah? Anyone? Nobody? No, Kevin, no. Nobody. Just no. Chua, Joe, no, you don't insure your phone. Lillian, you insured your phone. Okay, some yes, some no. Insured your phone, depending your phone value depending on phone value. You got a car. Okay, by regulations, no choice, you have to insure, isn't it? You insured, no? You buy a house, you insured or not? Okay, yes, you takut mah. All right, insured. You got a nice fridge. Then the electrical shop asks you, okay, warranty. This do you want to buy extended warranty? Yes, no, insured. Okay. Then your fridge, if you buy a cheapo, then you won't think of insurance. Tapi when you buy a good brand, which is expensive one, then you think you insured or not? I insured my fridge. I insured when I buy fridge that time, when I buy my what is so called the washing machine, I insured. Okay, it depends. Yes, some of you say yes, some of you say no. So you know that this apply. Some people will insure all this electrical stuff, but generally that this is about people attitude towards the value of this item. All right. Now in life, right, what is the most valuable thing? The most valuable thing is none other than our life. Seriously, these are just assets. These are just not the most valuable thing is our life. So in living, we already insured this. Okay. So in life, in the market, people know that medical, you need to insure. Okay. Critical illness it is commonly people say, critical, important, insured. Then family protections, give a lot. These are the common in the market that customer also being educated. If anything happen to you, your family, is not protected, then family insured. Okay. Now the next thing, travel, automatically will buy travel insurance. Any one of you travel to overseas without buying travel insurance? Anyone? Is it the automatic process that you buy travel insurance if you travel overseas? You macam you don't buy travel insurance and you takut to fly out of the country, isn't it? I don't know, like that's me lah. I'm very risk averse lah. Oh, so automatically even before you fly, although you will think of must buy insurance. Without buying the travel insurance, and you dare not fly. So you buy travel insurance. Now here's the new needs that seldom people talk about. It's about retirement. Insure your retirement. Insure the future you, which is your retirement. All right. Now, my topic today is about insuring the retirement. Okay, so this is where the Great Retirement Pride, the target customers, we're looking at 35 to 45. Reason being because this group of people, they are still some years of working years, so they got capability to pay for the premium, and the affordability and the risk that they're able to take, it is still there, all right, because there's still other options. So we're introducing an option to them that you should start early planning for retirement. That's where you start your discipline saving to ensure your future retirement. Okay, this is retirement pride. Okay, what does happy retirement mean for a person? Okay, like every one of us, right? I think none of us retire yet, so therefore you still listen to the talk. If you retire already, you wouldn't be listening to this talk, isn't it? Okay, if you retire already, you wouldn't be listening to this talk. So tell me, how do you define retirement, happy retirement? How do you define happy retirement? I've been thinking that, after retirement, my biggest challenge right now, thinking about retirement, what I'm going to kill my time. Because like us corporate, right? Actually, I stay in the office is crazy. I work more than 12 hours in the office. My boss like it crazy. Every day more than 12 hours one. I mean, most people in the corporate world, they are easily sacrificing more than 12 hours to the company. Financial freedom, meaning to say financial freedom is common, all right? Got money, got health, got time. True, got money, got health, got time. Got money, got health, got time. What else? Happy retirement. You got money, you got health, got time. What else? We receive passive income monthly. True, this is true, passive income monthly. Okay. That's all. Or 3% giving me, how do you, or the rest of you is still very young, have not think of the retirement, or dare not think of the retirement. You know, retirement is a blessing because not everyone got a chance to retire. You know why? Some people need to continue to working even after retirement. But if you got a chance to retirement, it's a blessing. Okay. Now, to most people, immediately, like what I said, got money, got time, no sick and good health. Okay. You're able to enjoy what are you doing. Okay. You travel with friends, you're still mobile, still happy, you can enjoy the time. Basically, it's to enjoy. Just like my friends, last year, I got one friend keep asking me to, Nicole, throw letter, you know. Imagine that your life is going to, let's say you go and die at 70, right? You left 20 years, you left 20 years to live in this world. What are you going to do? So she resigned, she retired. She instigate me to come, let's retire together, throw letter together. She throw. So she become a travel agent. So she became a travel agent. So you're thinking about, you know, how long you want to live and the remaining years in the world, what are you going to do? Okay, can do the stuff that you love. All right. So all this retirement is a picture that we paint ourselves when we retire. We want what we want to live that. Okay. So simply freedom lah, peace of mind lah, new chapter of life. Imagine the day we stop working is really a new chapter of life. Tour around the world. 尽量 yes, touring around the world, but to be honest, when you have age, right, you don't really have the energy to travel around the world if let's say your retirement age is later. Okay. Honestly speaking, when you're getting old, people will getting old will know you will have trouble you are afraid of night flight. You are afraid of jet lag. Okay. There are a lot of concerns. The ability to climb stairs, you know, all these concerns. So it's always a dream. Holiday together. All right. But all these dreams, what I would say, it will be very fragile, because this is what, that's why retire early. I totally agree with you. While still can walk, you enjoy food, right? Must retire early. Okay. So in order to retire early, so you must build your nest. You must build your nest faster. Okay. So fragile, because depends on one's savings. It depends on health. It depends on the longevity. You have money, you have health, okay, fine. What if your longevity, you live very, very long, if your money is sufficient to sustain or not? So it all depends on all this. You have money, no health, also no problem. You got health, no money, also got problem, sit at home. Okay, you have savings, you have health, but longevity also a problem. Okay, be an insurance advisor. True, because insurance advisor, you continue to have a stream of income, provided you continue to be active. Yeah, continue to be active, you will definitely have a stream of income. Okay, now, here is where this great retirement plan, right? It is about insured retirement. Okay, insured your retirement. It is not about having this plan getting rich, but it is about never being poor. You insured everything. Now is the time to talk about insured retirement. Okay. Commonly used financial tool. Let's run through one round, the advantages and disadvantages. Or every financial tool in the market, there are advantages and disadvantages. But we must all be aware that the decisions that we make, applicable to every one of us. EPF, good, definitely good. This is my primary retirement funding. Okay, stable return, disciplined savings. Even my bonus, I put it in the EPF. Stable, and I continue praying that, you know, my EPF rates are every March, every end of the February, we're looking at the rates. So this is the majority of Malaysians punya retirement funding sit here. Okay, the disadvantage is the risk of outliving. There's so many news about, you know, your EPF last 3 years, last 5 years. Okay, so the person the ability to manage the money. All right. So good is stable income and disciplined saving. The disadvantage is no guarantee monthly for life, and there's a risk of outliving the savings because you don't know how to manage your money. Because sekaligus you got one lump sum. Bank saving, very good. Low risk, high liquidity, easy access, very good. Okay. Tetapi the return is so low, our inflation is crazy. Yesterday I spoke to one leader, they called, do you foresee April and May inflation will goes up? I think so lah, because of the petrol, right? Honestly speaking, every closing in company, normally we will have one dinner rice box. You know, the economic rice in a box. In the previous months, right, I remember normally you have rice, white rice, you have a chicken, you have one fried egg. Yesterday closing 31st, we have chicken, tetapi itu fried egg sudah become slice egg. Slice egg. White rice, chicken, and a slice egg. No longer one fried, tak ada mata kerbau, no more mata kerbau. Okay, so it's become a slice egg. Oh my God. Okay, same budget you're paying, but you no more mata kerbau already, slice egg. All right. So you're asking me whether inflations or not. So very hard to say lah, but probability yes, because the moment the petrol it's going, subsidy is down, everything is up, is anticipated lah. Okay, property good or not? Good, because we expect rental income and a long-term growth, but it's also have the setback. You want to buy property, you need high capital, illiquid and maintenance costs. Okay, unit trust, very good because you leave it to the professional management. It's the long-term growth, but you're subject to market risk and return are non-guaranteed. It's good to have all these diversifications, you know. Stocks, high growth potential, dividend income. The no good part is high volatility, emotional stress. Okay, and you need knowledge and active management. You buy stock, you leave it there. The only way to make money from the stock, you need to trade, you know, you need knowledge. And then insurance, good because protection, non-probate, and guarantee, you've got guarantee payout. And of course, it's long-term commitment in lower investment return as compared, because it's a low risk. When you low risk, it's lower investment return. But all these are common options available. Each and every one of it has its pro and cons. And insurance is one of the good diversifications. Now here, of course, I'm not going to address the rest of it. I'm going to address the insurance part. Okay. Now, when we share the insurance with the customer, definitely we'll talk about the advantage, the strength of having an insurance. This product, it is about if you make it to retirement, you are financially secure. If you don't make it to the retirement, your family is secure. Okay, because you attend product briefing before, you know that working years, you have large coverage. But the moment at the retirement years, it is about you will certainly get guaranteed return without worrying that, you know, any income will stop. Secondly, it pays for the golden year expenses. You certainly have an expenses. Every month you will be receiving money from Great Eastern without depending on your children for expenses. Okay. Lastly, you know that there's flexible coverage. You have a best of both worlds. While the working years, you have high coverage. But when you retire, these are extra funding for you to enjoy life. This is the strength of this product. Okay. And in fact, what I would say is actually, we are the market pioneer in retirement solutions with having this product, a combination of life protections and retirement focus. Protection if life is short, and financial security if life is long. Before this product launch, all our protections plan offered by Great Eastern or offered in the market is all about the risk of dying young. The risk of, because it's giving is on the death benefits, okay, in the market. Now, when these two become a hybrid, you have the best of both worlds. You live too short, you will have a protections there. If the risk of living long, okay, when you retirement, then the income is there to support. Because upon death, this product, it is about this product is truly, I would say this product is truly for own self. It is not about for family. 60 years before 60 years, okay, die for the family. Tetapi after 60 is truly the product for the person own use. The rest of the insurance plan in the market is all about after 60 pun, right? Only die baru you give it to the family. It's all about the family. But ini memanglah produk untuk kita. It's for our own self. Okay? Now, let me share with you. I mean, you know this before. I'm not running through this in the product training. All right, you run through this before. How do we define this product to represent the overall benefits of the product? Okay, so now this is our target customers. Yeah, this is from the product. This is what I have identified. Who can we approach? All right, who can we approach? Number one, it is about customer who are willing to go through full underwriting. Number one, first, before you target any customer, the person must be willing to go through full underwriting, which is based on life and TPD and normal financial underwriting. This is number one checkpoint. Number two, are approaching people of sole proprietor, business owner, they don't regularly contribute to EPF. Okay, professional singles, okay, middle-aged couple, and emerging affluent who actually invest in property, who believe in properties. All right, who have properties. I mean to say that they, beside the property that they stay, they own more than one property or two properties. So this, based on this product, this is what I have assessed and analyzed, that if I'm the agent, I will find these four categories of people. Professional single, not just lady, men pun boleh, okay, men pun boleh. So men also can, so long they're single, they're professional. All right. Single people like me, single, what we worry when we're getting old is about our money, whether we're able to lock properly or not. Okay, we have no one to depend on, and we really depend ourselves and the retirement funding that we have built in my early years, in my working years. Okay, now sole proprietor, you know these people, the money they come in north, south, east, west, business owner. Okay, and you know that the money most of the time they will be busy. People who own money, business owner, what they find that the moment they earn the money, they try to use the money to build another business. Okay, I'm just relating to my sister. Okay, she is actually doing Airbnb business in Ipoh. She actually, from one Airbnb, she started to do. The moment she earn money, to get another one. Earn money, she get another one. Earn money, get. So the money that they earn, she continue to acquire property and property to do Airbnb. So same goes to people who earn money, a business owner, right? They also do the same. They've forgotten about, because money make money, to them is money make money. They've forgotten the part that they need to lock it up for their futures. They think that money rolling in the business is the future. But I think this is a bit too risky. I spoke to my sister about this plan as well. You cannot continue to roll your Airbnb profit, right? To get another one and get another one, get another one. You need to find a way to lock or some risk diversification purpose. Okay, so number one, these people, when they're so busy having money roll for another, rolling the money make the money work for another one, they lacking of discipline of saving. They forget about the saving because they are into the business. They keep rolling. Okay, so this is where why we target this. We want to speak to them. This is about you setting aside your disciplined saving for your future retirement. You have to need to ensure your retirement. At the end of the day, just like my sister, when she used the money to roll, she said she want to retire that time. She will be very comfortable as well. But she had forgotten, when she's so busy, and she forgotten that this rolling business, they will have associated with risks. All right, here I'm sharing with them, so she still to think about it, and she approached her. She has her agent friend in Ipoh, okay. But I opened the case. She said she will talk to her friend. Sister, she wouldn't really talk. She wouldn't really listen to me much. But she sort of like open up her mind. Okay. Secondly, when I talk to my sister, I open up to them. I mean, open up to her. When you roll your money, all right, your tax cancellation, income protection during your working years. She keeps saying that why she roll the money, because she want to retire early. But I don't think so. People who sole proprietor, right, the moment they see money, their heart is getting bigger and bigger because they want to earn more money, they want to earn money. Okay, so therefore you see a lot of people, right, sole proprietor, even though they are, the moment you see a lot of money, you will, in Chinese, they will say that, the moment you see the way you earn, you won't stop you continue want to even earn more. Okay, but the thing here is, okay, if anything would happen, right, whatever that money that you roll, you're borrowing, this product will able to cover that, okay, before 60. But at least at the age of 60 onwards, all right, there will be a guaranteed monthly income. This product guarantee life coverage, guarantee monthly income, guarantee additional monthly income. Okay, sure. If let's say there is a TBD under the long-term rider benefit, because this product, the TBD cover up to 70. So 70 onwards, when you're TBD, you need to buy a rider called long-term rider, and this rider is worth purchasing. Later, I'll tell you why, okay? And then guarantee additional coverage if let's say you need an elder care, Alzheimer lah, dementia lah, okay? Surgical excision of spinal meningioma lah, okay? Spinal related osteoporosis, these are the common conditions that may happen in the elderly people. So we have this guaranteed part of benefits given to the customer. So therefore, number one is about focusing on the discipline savings on the sole proprietor. So in terms of a professional, target professional, of course, the rest will be the same. But my number one point when approaching the singles, which personally, I'm also considering this plan. The only thing I'm not considering is because of the underwriting part. Okay, I do not want underwriting because for some reasons. Okay, number one is because being single, what we want ultimately is we want to be financially secure and independent. Financially secure and independent. Okay, now being single, honestly speaking, whether I'm scared of this or not, I am scared. You just wouldn't know, we are human. All right, this not just happen to women, it may happen to men as well. I also cannot control that whether I will be being because of greediness, all right, I may be gonna investment scam. Who knows? Because human investment scam, you say that, you know, I'm the most logic person, I don't think anyone will scam me. You know, I am stay true myself, I will be single throughout. I also cannot guarantee, honestly speaking. You know, I cannot guarantee. I'm not sure. I mean, I better don't say lah. These are the part that being single is my concern now. Love is blind, correct? Correct, love is blind. So I cannot be guaranteed. So I also pun takut lah. Okay. This is the part that the single one, whether man or woman, right, should consider about. You need to lock, you even if you have a lot in the EPF, right, you need to find a way to lock it somewhere to ensure that no easy access. Okay, I have one nephew, I sayang him or not, I will sayang. If let's say this nephew come to me, Ayi, you know, I want this, I want that, I want this, and you, will I give or not? If let's say I may give one, you know. All right, because love ma, I only have one nephew, okay, I pun takut lah. So far he never asked anything from me lah, all right, but so far I offer him lah, he never asked anything from me yet lah, but I pun takut lah in future, who knows Maybe you call me Ayi. In fact, my last time I asked my staff asked me, Nicole, you need a doctor or not, you need a doctor sister or not, a lot of my staff, they want me to adopt them, okay. Okay, now that's for single. Thầy Ma, Kevin, how are you? Nicole 姐姐, I okay lah, Thầy Ma, blah. Hey, Kevin, how are you? Cannot lah, Thầy Ma. Okay, 姐姐, okay. All right, why target middle-aged couple? Okay, this one, I have a conversation with my staff. All right, so I try to speak this product to him. He is in his late 30s, in his late 30s. So when I'm having a conversations with him about, you know, I'm developing this talk and this product, then it give me an idea. You know, most working couples, right, when during the conversations, we'll talk about retirement. So he sparked me in the sense that retirement, he's a man, he said, when come to retirement, I cannot be saying that I plan my own retirement. I also need to care for the retirement of my wife. Then I asked, your wife is working or not? Then each of you should care for your respectively need to care for your retirement. For most normal couple, okay, when the day that a person retire, all right, some family I know, some of my auntie, uncle, right, they share their funding one, meaning to say that every month, this is the makan funding, meaning to say the household expenses the utility the makan they will base on this funding. Okay, you base on this funding. Some will divide, okay, the food one, the lady will take care, the other utility, the rest the man will take care. Okay, of course, some men will take care everything, but I think on the average family, most of them, they will share because both of them working. Now, having this plan, right, so no need to argue in future that, why, you spend more, I spend more for the family, you spend less. Here, everyone contribute a bit now, assuming that everyone, when retire, this insurance plan contribute a funding of 500 each, become a 1,000 funding. This is 1,000 funding is for the retirement. So this is the couple. Close the couple, share the retirement dreams together. So insurance is paying this retirement funding. Example, you sell 50,000 to the husband, to sell 50,000 to the wife. Okay, so when it come to retirement that time, you know that there's 1,000 funding they can use for makan, for utility, and for travel. That will be that funding. So this is a couple that you can approach together. Not just sell to one person, but you sell it to the couple dreams, the retirement dreams together. Okay, so this is the target market for middle age. Then for property, properties enough. Property, whoever owns property, for most of you who own property, you know the challenge of having multiple property. Okay, the diversification to secure property with peace of mind. Okay, people who have a property, they will know what are the challenges that you face right now. All right, because it's oversupply. Rental is a challenge. All right, oversupply. Some actually very lucky were able to get very good rental, but majority will have a rental issues problem. All right, and I listen to many people will say that, the rental that you have gotten, the moment the tenant move out, right, your rental income have to fork out to rebuild the home, okay, to rebuild the home, because most of the time the tenant move out, right, the whole house you need to touch up again. All right, this is the property management you need to have headache then. Okay, now here is a sample premium table. I'm just talking about a person who pay until 60 years old. While you're still working, you pay until 60 years old. So this age 30, 35, 40, and 45, this is the annualized premium. I just use the annualized premium. We're talking about the annualized premium 30, 35, 40, and 45. Okay, this is the average monthly premium. This monthly premium is as good as you're paying a property installment, isn't it? Okay, assuming you're paying a property until age 60 years old. All right, until age 60 years old, you're buying a second property, which is your retirement property. So this is the total premium paid. This is the total premium paid. And by having this total premium until 60, by having this regular premium, right, regular premium, you take it as a monthly installment, that you're securing a property of 500,000, which is worth 500,000 before age 60. Okay, but if you live beyond 60 onwards, right, until maturity, you will be getting this as well. All right, so this I mean to say that you get income until age 90. This is total a person will get. So this is what we call Great Retirement Plan. It also can be considered as a life property guarantee value. All right, whatever regular premium that you pay right now, you're setting up a second property for yourself with a guarantee element. The best part of it, beside the guarantee element, this is a non-probate asset as compared to the property, the physical property. And this definitely give you peace of mind. No need to worry about managing the property in future rental concern. So this is another concept when you're targeting the property. People who have invested more than 2 properties and things like that. This is setting up another invisible property for yourself. It's meant for your retirement that comes with a guarantee income to enjoy the guarantee monthly income upon the retirement. All right. Now it is very much on the concept and touching on the concept part. So ladies and gentlemen, so far are you good with the concept that I just want to share with you? Okay, love scam more interesting. Okay, yes, I just want to touch about the concept thing, okay, because training, you already attended the training, but this is very much my thought towards this product. Okay, now, coming back to re-highlight a bit of this product, I want to emphasize this is the first in the market that we have dual phase life protection that give guarantee element. Page 20. Page 20. Page 20. What is page 20? I don't have page 20. Do I have page 20? Never mind. Okay. Okay. Working time protections. All right. So this is, like I said, people who are still working, your target 35 to 40, they need to buy legacy plan, correct or not? Okay. They also need to buy to increase their life coverage. So this is a product able to cover, to take care of the life coverage. So it's a combination of a legacy product coverage and also the income for them. So working years, you get a 500,000. If you sell 100,000, you get a 500,000 coverage. Okay. Then secondly, when this is the retirement income, your elder protection. So this is where we say that, combinations of the best of both worlds. So this product is never about for a family. It's truly for your own self, for you and for even for myself, example. All right. But in my current situations, I don't need life protections. I only concerning the locking of the income part. Okay. So this is a part that where a person will still have protections gap. This is a beautiful product for them because they have fit the protection gap while during the working years, but at the same time, they're also doing something for themselves. Okay, the best of both worlds. Now, I'm recapping this again. Whichever sum assured that you purchase during before sum assured that you purchase, upon that there will be 5 times of the basic sum assured. Okay. Now, so far what I've seen at the moment in your presentation, any one of you have present GRP to any of your customer before? Okay. Any one of you have present, and can you share with me what kind of quotations that you have quote? What kind of sum assured that you have quote before? Any one of you sum assured? Anyone? No, nobody quote, nobody. Any one of you quote any sum assured before? Try quotation. Try pun tak ada try Oh my god, 700 orang. Tipu saya sikit lah, weh. Tipu saya sikit pun make me happy mah. 100,000 ini okay. I feel good lah, you at least you tipu sikit lah. Wah, ini tipu terlalu tipu already. Basic sum assured 500,000. Haven't try. Okay, 100,000 okay. Ini 500,000 I don't quite believe lah. Okay. Kau try. Okay. After class try. Cantik ini. Wen Hao. After class try. Try. Okay. Okay, try. Kau try lah. We'll try after CI. We'll try after CI. Oh, after class. Can further explain a bit quotation. Okay. I want to see how much your quotation. 200 sum assured. 100,000. Premium. You all use premium to quote. Okay. Premium to quote. Okay, here are my Nicole Fong suggestions. In whatever quotation that you present the case, start the case with 100,000. Because in 100,000, it's easier for you to present the income. Because the income is very simple. 1%, 1.5%. So you use 100,000. Sum assured, they're easier to relate. So when a customer cannot, if a customer attracted to the plan, they will find way to find the budget for you, correct? Not so. Start with the quotation with 100,000. Start with the quotation with 100,000. So because the submitted cases that we see, the sum assured very funny one, I see 32,123 ringgit sum assured. Ada itu 57,472 sum assured pun ada. This kind of sum assured very hard to present the income part. So try to present the case with 100,000 sum assured. 100,000 sum assured to let them understand the concept and the income part. And of course, when they see, oh, this is beyond the affordability, of course, you break down to monthly first. If you think that this is not the budget, then you cut half, become 50,000. Then your income also easy. Become like 1,000 income become 500,000. 50,000, 1,000 income become 500. So quotation start with 100,000 to present. Okay, then beyond affordability, then it's easy for you to cut. Because the submitted cases, I find the sum assured very funny, not in a round figure. So I suspect that you use in budget to present the case. Okay, right now the concept is like this. Okay, let me just explain overall again. This plan design like this. The moment you finish the premium payment term, immediately the following year got a yearly survival benefit. Yearly survival benefit. Okay, so this plan, because we're talking about retirement planning and we're talking about retirement income, this is about, you know, easily 10 years, 20 years down the road, the kind of money that you want to get. The amount of savings you require, the budget will require, all right, it is not a small amount, because we're talking about you want to achieve that, okay? So therefore, affordability, when a person's affordability, it comes back to the customer that you target at. You wouldn't target a customer who have affordability issue, isn't it? First thing first, when you identify customer, you must identify customer with budget, correct or not? All right, so you have these payment options, 5, 10, 20s, and up to 60s. Personally, I feel that if you are approaching a customer who is an employee, right, you pay up to 60 is reasonable, because you're still working, you're still working. In fact, when I considering this plan, right, actually my payment until 60 only left 8 years. That indirectly telling you how old I am. Okay. I was thinking that in case Nicole Fo next year is actually retire, I'm thinking using my EPF money to move my EPF money into APA account, because this is a traditional plan. This is a traditional plan. So I have that consideration of thought as well, because I can move my EPF money. So at this age, is my premium size high? Yes. It's about 5,000 plus per month. Okay, it's about 5,000 plus per month. So therefore, you're talking about a person who is able to have this budget, you must aim at the right customers. So if a customer is not this budget, that is not your customers, not for this protection needs. All right. Now we're talking about in future, you need that kind of money, meaningful money that you can use. All right. So other than that, if let's say budget, it is not for the retirement, then you have to talk about covering other needs. Okay. So now here, take note of the moment end of premium payment term, 60 years old or 5, 10 years old, immediately the following year, you will have yearly survival benefit until 60. Okay. When upon 60, that time, the monthly income, retirement income will become a monthly basis. Here is a yearly survival benefit. Katakan, you buy a plan, is until 60, all right? Then your yearly benefit only get one time sahaja, which is at the age 60. Okay, so let's say your premium payment term is short, then you still have chance to get yearly survival benefit from here. Okay, if let's say the premium payment term pay until 60, you only get one time of survival benefits here, because starting from age 60 onwards, you'll be getting a monthly income. Okay, now not only that, okay, the sum assured, because 60 down to 100% already, you buy 100,000, before 60 die, get 500,000, okay, a legacy. So after 60, we're talking about sum assured back to 100,000. Okay, you don't need, because like 60, you're talking about you need to focus about retirement income. If a customer say, I want 500,000 throughout, then now you go and bundle with the legacy plan sekaligus lah. You sell this one together with the SRM sekaligus propose. Don't limit by plan, okay? So not only that, if let's say elder care, you have additional 30% basis sum assured. Long-term care, this is about OHTPD. OHTPD. Okay. This is the overall structure of the plan. This plan is designed to take care of the older age, to take care of living long. All right. And then you have maturity benefits. This plan is worth, you were talking about worthwhile, if die early is worth. Okay, after 60, you have to live long is worth. Okay, this plan, let me repeat, if before 60, die is worth. If this plan after 60, you need to live long is worth. You need to live long is worth. Okay, the moment 60 touch 60 die, this plan basically you get back the total premium paid, because the plan is about retirement. If you're not able to make it to retirement, you will get back the total premium paid. Basically, it's a getting total premium. So when I check with the product, basically 60 to 65 years old, if a person only live until 65 years old, right? The total value the person is getting back mostly is a total premium paid. Okay, it's a total premium paid. All right. But like again, this plan is to take care of while you're still living. The moment a person pass away, whether worth or not worth, it is not the concern of yours already, because it's not a concern because the person already passed away, ma. Whether worth or not, it is not about you already. It is about the beneficiary. Okay, so it's not about gift of love. This is a gift for yourself. It's not about gift for love. Okay, so this to take care of the risk of living long. All right, now sum assured unlocked. There's also an additional new feature in the market, which is sum assured unlocked, meaning to say you're advancing your future premium maturity value, or you're advancing the death benefits to convert into cash. Take the cash use first. All right, so this is called sum assured unlocked. And I'm going to share with you now this overall structure, which you really went through during training. Okay, now what is sum assured unlocked? Reverse mortgage, use a concept, reverse mortgage, meaning to say your property, you give it to the bank will give you a month income stream. Okay, this income stream, and you continue to enjoy living to the extent, all right, to the extent then you pass away, all right, only you repaying to the until you pass away, then only you settle whatever mortgage to the bank. Okay, this reverse mortgage. Now sum assured unlocked is like this. You have this insurance policy. If you want to access to the sum assured, you unlock the sum assured, sell your sum assured to Great Eastern. Great Eastern will give you the money. Sell the sum assured to Great Eastern. The sum assured to Great Eastern will give you the money. Then together with your guaranteed income, sekaligus, you use until mati. Okay, sell back your sum assured to Great Eastern. So this is what with the sum assured unlock. Okay, now, all right. So here, this is part of the training slides. Part of the training slides. This product, you can attend training 3 times, 4 times, 5 times, 6 times. If you will need to really experience it, you need to do quotation. Secondly, you need to start talking to people practicing to tune in your retirement planning. So that day I have a meeting. I actually have a lunch with a leader, husband and wife, they're leader. So during the lunch hour, right, the husband and wife, they're trying to practicing this product to discuss how am I going to identify the market. Then they ask me for suggestions that is it that way? Is it that way? They need my technical example to planning into, because husband and wife, they are one is GM, one is UM. They're discussing, how am I going to approach the customer? What kind of going to talk? They're actually thinking out to practice it out. So you need to you need my slides. You finish the slide, please give time to screenshot. Oh, okay. So they're trying out. So training you can attend many times, tetapi you need to try your quotation to understand. So the first thing is that you sell to yourself first before sell to others. Whether this plan get your buy-in or not. Number one, all of us, let's say assuming all of us got a chance to retire, you yourself will consider this plan. You have to figure it out first, right? You have to figure it out first. Now, okay, let's say this, I'm using back the training slide. I want to recap again. Let's say we're talking about a sole proprietor, means the business owner, they don't have a disciplined saving habit. Disciplined saving habit. Okay, now GRP tax relief? No tax relief. Where got GRP, no tax relief? Okay, you just take money only lah. Insurance, other tax relief lah. No, the only insurance plan is under life lah, which is what, berapa 3,000 or 4,000 the under life. This is under life, the tax relief lah. Okay, now, so let's say 50% of our money go to EPF. Okay, 50% of your money comes to this GRP, like example, the money that you're able to afford for savings. So this sample is talking about pay 10 years. Pay 10 years, example, pay 10 years. For a 40 years old man, okay, pay 10 years, basic sum assured 100,000, right? 100,000, okay, monthly premium is 2,142, okay? How much is the property installment nowadays? You pay property installment how much? Rental I mean you pay property installment mostly because I long time never pay already, so I don't know. Berapa nowadays? Okay, anyone who is still on mortgage loan, how much your monthly payment? 3,000, 4,000. Oh, okay, sub sui lah, sub water lah. This one is okay, 2,000 plus. This is another property you can pay, right? This is a property for yourself. Okay, 2,005. Okay, okay, right. 4,000, 5,000. We you need atas ni LXC. Okay. Now, so let's say you pay 10 years already. This guy 40 years old, after pay premium 10 years, berapa umur? 50. So 50. So from, as you can see from here, the last premium paid is 49. Age next birthday 49. Because 40, 41, 10 years already, age next birthday 49. So hence, right, the yearly survival benefit will start at age 50 until 60. Every 11 months, every 11 years, every year will get 1,000. Sini faham tak? Yearly survival benefit, every year you will get. Because you finish payment at age next birthday 49 ma. 40 until 49 is 10 years ma. Oh, so subsequently the following year you get 1% of 100,000. So why I propose 100,000? Because easier. If 100,000, 1% 100,000 is 1,000. So every year get 1,000, 1,000, total 11,000. Sini faham tak? Faham ah? Okay. I go a bit slow lah. Okay. Now, during this period of time, the sum assured is 500,000. Okay. When you reach 60, that time the sum assured will reduce 100 law. Okay. Now, here, the moment 60 years old, you start withdrawing money. I belum sampai lah. I don't know how does it work. Is it monthly withdrawal? Can monthly withdrawal or not? Any one of you, I'm not sure whether can monthly withdrawal or not. This one I belum try. I need to ask my friend because he withdraw he choose the option withdrawal is every time got EPF dividend, right? It will be automatic withdrawal. Got monthly withdrawal. Okay. Here, age 60 onwards, you will get a monthly 1,000. The first 15 years, 60 to 75 is 1% of the sum assured. Every month you'll be getting 1,000. This is referring that let's say you buy 100,000, every month you get 1,000, 1,000, 1,000 until 75. Okay, 76 onwards is 1.5% of the basic sum assured. Okay, basic sum assured. So it will become 1,000, 5,000, pay until 90. Then the plan matured. Plan matured, maturity benefit 100,000. Okay, so total SB and RI SB, that means the monthly income you'll be getting is 455. Okay, plus the maturity benefit, actually all in is 555,000. It will live throughout 90. All right, now itu animation sudah jalan. So overall concept is macam ini. Boleh faham tak yang ini? 11,000. 11,000 because after the end of the premium payment term, right? In this example, this fellow 40 years old, pay 10 years berapa? 40 until 49 is 40 until 49 is 10 years. So starting age 50, right? They will start to get yearly survival benefit. Every year will get yearly survival benefit. So 50 until 60 is 11 years. 11 years darab 1,000, 11,000 lah, Suresh. So before 60, you get yearly survival benefit, yearly. So when you reach 60, it become a monthly. Faham tak? Okay? Alright, I proceed. This general fundamental. Okay. 11,000. No, 1% of 100,000. 1% of 100,000. 1% of 100,000. So it's 1,000, 1,000, 1,000, 1,000. Okay? Even this product, I recommend payout. I don't recommend reinvestment. I don't recommend reinvestment. This is about why you having a retirement planning, because you want to get the money out and not reinvesting. You're choosing an options. This is my view. I recommend payout. You buy this plan, you choose payout, don't reinvest. You reinvest, the moment you reinvest, the moment go to the fund, the income become non-guaranteed, right? What is guaranteed is the money to your pocket is definitely guaranteed. When the money goes to the fund, it's no longer guaranteed. Okay, we're subject up and down. And after all, if you want a plan that able to reinvest, might as well, all right, you choose a legacy plan, which is a reinvestment. You can choose GMGW kind of thing. So this plan, I highly recommend payout. The story is about paying out. You get the money, all right? You spend the money from this plan, all right? Not make it roll, not make it compound, okay? So let me see. So monthly one will start 60, age 60 onwards, age 60 onwards. Age 60, 60 onwards, not 61 onwards, they will get already. Okay, now can do APA 5 years. Can do APA. This is a traditional plan. You get traditional comp, so it is can get APA. If you choose reinvestment before 60 and after 60 to choose payout, then your quotation you will not able to see. They don't have half one. So you propose, you showcase a payout, then you showcase, you can do two payout and then you do reinvestment. Okay, now this is another example. This one 40 years old. Okay, pay 20 years. 40, 20 years. So ngam 60 or 59. Found that. 40 pay until 59 or 20 years. Okay, 20 years. So the survival benefit only can get what year? 60. This one faham? This one faham? This one okay, huh? Right now. 60 onwards is 1,000. Same long, 1,005. Okay, 1,005. Okay. So sum assured unlock, I want to explain. If you do sum assured unlock, right? The basic sum assured becomes 0 because you sell off your sum assured to the company to convert into cash. Okay, convert into cash. All right. So we cannot move on. When you sum assured unlock, the total SB here 445 is basically your 1,000. How you get the 445? Here you darab your 1,000 darab 16 years. 60 to 75 is 16 years. Okay. I think I should give you a calculation how to work this thing out 445. 60 to 75 is actually 16 years. You calculate, use your finger to calculate calculate. It's 16 years. You darab 1 tahun 12,000. Okay. 16 years darab tahun 12,000. Okay. That is the first until 75. And then 76 until 90. Until 90 is 14 years. 14 years. 14 years you darab 18,000. Okay, then finally your maturity you get the 100,000 and also tambah 1,000 dekat sini lah. So it become like, I think it's 445, something like that. Okay, 445. Okay, now sum assured unlock is every year get 21,000. No. Now I want to explain sum assured unlock. I want to explain sum assured unlock. Okay, where's my sum assured unlock slide? Don't unlock your sum assured. Wait, I want to show my sum assured unlock slide first. Where's my sum assured unlock slide? Okay. Never mind, later I'll show you. In the quotation, I explain why the quotation easier. I explain why the quotation easier, okay? I show you the quotation easier. This is just the concept understanding first. I thought quotation easier to explain. Okay, now. This one, based on the training side, again, 100,000, this is a premium size, sama So because 40 to 20 years old, you only get 1,000 at the 60, then subsequently sama you have elder care. So this is the part you unlock. Okay. Now this figure, you're not able to calculate simple like this one because when I check with the product, they will have to use Excel, show me that it's by month. You have to calculate by month. So it's basically an Excel way to calculate. So you want to present, you're presenting the concept, not the actual value, because this event wouldn't know when will happen, but you're presenting the concept. The LTC is a rider. So now we are recommending, if you're selling 100,000 sum assured, your LTC also recommending a 100,000 sum assured, so that when LTC happen, that means OHTPD happen, your income become double. You get what I mean? Let's say this person age 70, immediately kena OH disablement, meaning to say 3 out of 6 cannot do. 3 out of 6 cannot do. So instead of getting 1,000 monthly income, the person will get 2,000 monthly income. So this rider, okay, this rider is really worth it, meaning to say that whatever income that you get from the LTC rider and this person survived until age 90 and didn't die, this rider premium will be given back to the customer as a maturity value. So you want the most worthwhile is, actually, you will want the best deal of this plan is the person kena elder care benefit, qualified elder care benefit. This one, money earn because you get extra 30,000 ma. Then kena LTC and don't die then you double up the income. And until 90, also still alive. This product is super earning already. Because LTC income, when maturity, they will get back the rider premium. They will get the rider premium, regardless of the income already taken. So meaning to say that LTC, whether kena or tak kena, at maturity, you will get back your rider income. Your rider income. Okay, now I want to show quotation to explain to you easier. Okay, sum assured unlock is where you sell back your sum assured to the company, and this I don't recommend it to exercise unless it's emergency. Okay, now I will show quotation. So this product is about an early retirement planning where the younger you take care of the older you. And this applies to every one of us who are still working and then you are still in the insurable age. Now, this product is insured your commitment during your working years. Okay, this product insured your commitment during your working years. And this product also insured your retirement during your golden years. Okay, so this is what we call great retirement prep solutions. Now, I want to move on to show you the quotations that will be easier to relate. Get a shock. I'm telling to you, your commitment, you still got money installment, so your commitment now insure your commitment, also insure your future retirement. Okay. Now, I quote one example here. Now, I run through the quotation with you. Are you okay? Are you okay, right? Now, easier to speak from the quotations. Now, this quotation I use at age 30 years old. Okay, now here, investment booster, either 100% payout, 100% reinvestment. So you may do two quotation. One is 100% payout or 100% reinvestment. Of course, reinvestment cantik lah. Reinvest you don't use the money but to me, what's the point? You need to take the money you get this plan, you take the money. Seriously, unless your sum assured, you buy very huge. If you're selling a sum assured 50,000, you're selling a sum assured of 100,000. The 1,000 reinvestment is very small. The reinvestment is very small. So I suggest this plan. Do not want to complicate the customers because as a customer feeling, right? I feel good when I take money When you reinvest, I don't feel it My point whenever insurance, give me money, how come I got money how come I got money? Every year also got money But you say every year reinvest and bo feeling So I will tell people that, my insurance plan you give me money every year, give me to the account. If you keep on reinvesting, you feel good, but you want the feeling that you're paying up to you, whether big or small. Correct or not? So this product, I would recommend that payout. All right. Now, premium, even though it's a traditional plan, there's no model factor. Maksud, if let's say your annual premium is 12,000, your monthly premium, you just divide by 12 so it's monthly 1,000, just divide saja. Okay, so there's no model factor like traditional plan. You find that you pay yearly more worth it, you pay monthly is not so worth. Okay, now, okay, this is the second page. All right, so sample premium you pay until 60. This is the sum of, excuse me. Okay, now when I figure out this 100,000, some of you may confuse, hey, actually the 100,000 is until 60 or until 59 because the contract says by 60, right, your sum assured is actually left 100,000 saja. Tetapi how come, right, my quotation 60 show 500,000? Do you have this confusion? I thought 60 already 100,000, tetapi why 60 still 500,000? Right? You have this confusion or only me is confused? I have this confusion. Let me explain to you. When you see this 60, betul. Are you, yeah, betul. Actually, when you show it's 60, that time you already 59. 59. So you still 500,000. The next year already sudah jadi 100,000. So these benefits are guaranteed. Okay, guaranteed death benefits. By the way, the premium rates are guaranteed. Only the LTC rider, the long-term care rider, is non-guaranteed. Okay, the basic is actually guaranteed. All right, now death payout after retirement income. The moment after 60, right, the death benefit will go down. Okay, you will see the guaranteed death benefit is actually lower. Like I said, this product is to cover the risk of living long. So the most important thing is the person to get to enjoy. It is never about gift of love. When after 60, it's no longer about gift of love. It's about gift to yourself. This product is to give to yourself, not gift of love. Gift of love is before 60. So after 60 is give to yourself because you're already enjoying the income. If client choose reinvestment beginning later, can change to back payback. Can it switch? Can switch, no problem. Customer can, but quotation not able to show. Quotation not able to show. I want to pay until 60, then after that I become a payout. You can do that. Tetapi like I said, you will choose reinvestment, right? The compounding factor is may not be significant. You can do that. Your options can tukar. All right, you can choose reinvestment first, sekaligus later only can pay up, boleh juga. Okay, whichever way also can, no problem. Tetapi quotation not able to show. Right? Now, why death benefit after reduce already, Death benefit reduced, guaranteed death benefit reduced already. So there is this traditional guaranteed death benefit is reduced already. So this product still got cash value. So basically, let me put it this way, for all the income that you get plus the guaranteed death benefits, age 60 to 65, roughly the person will only get back the total premium paid. Okay, 100,000 because the plan also got some guaranteed death benefits. This is a non-par plan. This is the traditional plan. All right. So traditional plan also some guaranteed death benefits on. All right. So if you get 100,000 sahaja, then total you were supposed to get back total premium paid. This product will not lose money because the worst case scenario you get back the total premium paid. Kevin, if you cuma dapat 100,000, right? Chances is actually the total benefit you get is lower than your total premium paid. You see. All right. No, partly no. Under annuity, no. This is not annuity plan. Annuity plan is not designed like this and not commission in a traditional com. Annuity commission is different. This is a traditional com, full traditional com. 171. Okay. Now, this one should I explain? This one should I explain? Okay. Okay, now then the following page. When a customer choose survival choose payout, what will happen is everyone because this sample is 30 years age 30 so you pay until 60, so total pay until 60. So at the age of 60, right, he will get one what's the name? I cannot see. Move it up first. Cannot see. Okay. Survival benefit. This is a sample. When you choose payout, you will see the survival benefit 1,000 here. Then retirement income, this is a payout. Payout. So until 75 is 1,000 every year. Until 75, 76 onwards will be 1,005. Okay, 1,005. All right. Now, you get so far so good. This one you understand. If you choose payout, it will be like this. 60 drop to 100,000. Why 216? Like I said, Ping Kim Chong. If you just pay 100,000, this product also got cash value. The product itself got cash value. So guaranteed cash value plus there's a cash value in it. So you see a 216 is basically is also got cash value. That means the basic sum assured plus the cash value combined become a 216,000. All right. So 216, so you want to ensure the customer won't lose money. Imagine you only get 100,000 coverage. When death after 60, premium already pay 252,000. Tetapi you get 100,000, you will lose. So product design in such a way that the customer will get back at least total premium paid in the early years lah, huh? You get what I mean not? Okay. All right, now this is where you will choose reinvestment. So reinvestment summer is appear in a different column. All right, in a different column. Okay. Okay, now if you choose payout, this is what you will see. When maturity 100,000, final income 100,000. So total when maturity that time, actually X or Y doesn't matter because already paid out to you. Total survival benefit received by the customer is 443 already taken. So plus your 101 and 500, so total is actually 545. If the customer live throughout until 90, this customer already enjoy that the Great Eastern already helped them to lock up the value and they enjoy this guaranteed income throughout. Okay, the guaranteed income throughout. This part, you okay? All right, this part you okay, right? Now, before I move on, this one is understood, right? This one is understood, right? Okay. 443 is a total survival benefit getting total survival benefits received by the customer. This one pay out to the customer pocket directly. Pay out to customer pocket directly. Okay. Like I said, 70, you calculate skip 60 to 70, 75, you get 1,000. That one you calculate. So total, you're getting this. Okay. Now, this you not it's confusing. There's a neat learning curve huh? This one nobody understand how come from where? 101 maturity is 100,000, final income is 1,500 at 90. So 100,000 plus 1,500 is 100,000 and 1,500 lor. This one faham or not? This one faham or not? 101 500,000. Oh, ini mathematics ni. Okay. The 443 500 is basically total survival benefit the person has been getting since 60 years old until 90 years old. The total money already give to the customer pocket. So 443 500 plus the 101 500 total is 545 lor. Or is my mathematics correct? Okay. Faham this one? This one money pay to customer pocket already. Okay, now I told you a quotation. If you choose reinvestment, okay, tak boleh keluar punya. If you choose reinvestment, this is how it looks. Maturity, you still get 100,000. But the moment it is a reinvestment, the money will not go to your pocket. It will go to the investment fund. The moment goes to the investment fund is no longer considered a guarantee because masuk money today, tomorrow market crash, you will not get back the same money. So it becomes a non-guarantee. All right. So assuming this quotation, you don't take up money at all, semua campur-campur, okay, the projected in the low scenario is 636. High scenario is 931. All right, high scenario. So, but in retirement, that is not the objective of putting in the money and reinvest. So I'm just showing you the difference. Okay, so this plan option is what? What option? You can choose reinvest or you can choose to pay out. Okay, ambil belajar better, ambil belajar better. Okay, these are the same profile. I'm showing you that the above is 100% payout. This one, the bawah one is reinvestment quotation. Okay. Before 60, after 60, the fund to go to reinvest. But though this one, the bawah one is the quotation is 100% reinvestment. We don't have quotation before 60, reinvest. After 60, pay out. Because in the guideline, you can only quote 100% reinvest or 100% 100% reinvest or 100% payout. Your illustration. Okay, no medical limit, same as ordinary plan. All right, same as other, no, it's a normal underwriting plan. If it's 100% full withdrawal, basically no money in the policy will be in mutual fund. Am I correct? 100% full withdrawal. I don't get what you mean. Yes, can change time from time. Yeah, can change from time to time. From time to time, you can change the option from time to time. Like I said, you can change from time. Don't complicate. Don't complicate it to the customer. Say that you sell this plan. It is about, you know, you get money. You just get money out of. Then you reinvest lah. You pay out. You reinvest. Like it confusing. You sell the whole concept to the customer that this money you lock it up. All right. You just enjoy 60 years. Every month you're getting 1,000. From 76 years old, every month you're getting 1,005. As simple as that. No need to show reinvest, you got this value, your payout got this value. You like it complicated, but this is for your understanding, is okay. All right. Now, here, the next one, it is about the annualized return. If you choose the annualized return as a payout, this is what you will see. Because you pay to your pocket, your annualized return will be like this. The older ages, your annualized return, the annualized return, but you don't ask me how to calculate this one. You need a very complicated calculations from the actual side. So basically, the older ages, you see your annualized return is basically lower. Your younger ages, your annualized return is actually higher. All right. So basically, this is about the annualized return by putting in a product that give you the life coverage and also to give you a guarantee income when you retire. So the average, the annualized return would be like this. All right. Now, this is the part where if you choose to reinvest, people are confused. Ayo, when you choose reinvest, how to explain this? When you choose to reinvest, right, all the income payout become non-guaranteed. So the only left guarantee is the maturity benefit, which is in this case is only 100,000. So therefore, when you look at the guarantee benefit, the annualized return is become a negative. All right. So once it's become a reinvest portions, right, you have high and low scenario. So that is the difference. So when you choose a payout, it's more simple to explain that your payout, this is the overall annualized return. All right, your overall annualized return. I think what is short of how to get the 443, right? I think in my afternoon sessions, I want to work out a sample, the mathematics, how to calculate that, because since many people is asking that, okay? How to calculate, I don't have an answer. I do not know how to calculate. These are actual calculations. This is so-called, it's something like the IRR. This is actually IRR. You talk about cash flow, inflow. You need an Excel to do the inflow and the cash value. All right, rate lower than FD, definitely lower than FD. All right, like I said, this product is never competing with the FD. FD never pay commission 171. All right, so this is not competing with FD, but you have to sell the strength of this product is a guarantee element. Okay, it's a guarantee element that is not competing with FD, is not competing with the EPF. It's the guarantee element with the protections and the income provided. Yeah, okay, now. Yeah, zero, then question, then this is not the target. Your confidence is actually you aim at the wrong customer. If let's say they have affordability issue, you should look at quality of the sales that you're getting, right? So you're considering PR customer not afford to pay, that is not your right customer. That's not a quality customers lah. You don't want your customers to be affected, by this. You have to aim at the right customers. So traditional plan is memang don't have cash flow. It's a common thing, all right? Now, this is the part I want to say that the sum assured unlock. This is the meaning. So when to use a sum assured unlock, basically you sell off the future value. Actually, the plan maturity is 100,000. 100,000. Tetapi you want to take the 100,000 which is happened to give it in 90, you want to sekarang sudah ambil. You sekarang ambil is not 100,000 now. You have to base on the present value already. Okay. Now, this means if you take upon 61 years old, you not take your maturity benefit in advance. You want to sell your death benefit or sell your maturity benefit of 100,000. The moment 61, you get your present value. If you take one lump sum, it's only 22,000. Tetapi if you want to take your money spread over the 5 years, is every year 4,500. Tetapi this one will pay on a monthly basis. This one will be paid on a monthly basis, which is very small amount. I normally don't recommend sum assured unlock unless it is a necessary or emergency. okay, you only as necessary. Other than that, why you want to unlock this? Single can consider to unlock this because I don't need the death benefit. I want to use the money first. At the end of the day, until 70, I just continue to use the money. I don't need maturity benefits. Then you use the money now. Let's say 60 years, 1 years old, I don't want to unlock. The later I unlock, the later I've got a higher sum assured. Let's say at age of 60, 65, I go travel. Instead of using my EBF funding, whatever, I can unlock the sum assured because at the end of the day, if I live through 90, I don't need maturity value. I take the maturity value, I might as well go travel. All right. So why I say this is emergency, if you unlock the sum assured, right, that means you sell off the death benefit already because you use the death benefit in advance. All right. And immediately the person died, right? So you will find that your beneficiary is not getting enough. Macam not worth it lah, But at the end of the day, like I said, this plan is for you to use money. You try your level best. Whatever that you save, you use it as much as is possible, but it's still in a controlled manner. So this sum assured unlock unless it is emergency purpose. Don't simply unlock it. But you remember that you can unlock it. Let's say you don't want to use your EPF money for some purpose. I want to go travel. I want to fix the door. I want to do this. I don't want to use the money. You can unlock it. All right. So this is what I said that, the longer that you unlock, then mean the chances of, your value is actually better lah. Let's say you immediately unlock, use your money 61 years old, you only get 22,000. You later unlock, maybe you unlock, I still show you. Let's say you unlock at the 70, you get about 32,000. You sell, you get 32,000. This is about the present value of your future 100,000. Okay, when you 5 years option, right? This let's say example, you unlock for 5 years, means your sum assured unlock, right? Your maturity unlock. Company every year 4510 will give you, tetapi will pay on a monthly basis. Imagine your 4510 divided by month. Very small amount. Okay, so unlock exercise is only when you need it in an emergency purpose or you need it to use it. You don't care about maturity benefit, you don't care about the death benefit, you want to use it because it's your own money, then okay. All right. Yes, Wong Bi-chin, the retirement income continue to pay. This one is like tambah saja. So normally you tambah, the amount is very small. Your unlock is very small. Okay, you want to unlock, you take lump sum for some purpose. Okay, but you unlock, you divide into monthly, you get very small amount. Get lump sum. My recommendations is actually you want to unlock, you get lump sum, but don't unlock so early lah. All right, you use it for a purpose. Don't use it for saja want to unlock, want to feel the unlock. No, you use it for a purpose. Otherwise, you don't choose 5 years, 10 years. It's very small when converting into monthly income. Very small. Okay, that's my recommendations. The feature allow you to unlock over 10 years, unlock over 15 years. Slowly saying. Imagine, let's say you unlock for 10 years, your 2310, you divide by 12 months, berapa ringgit? Satu bulan berapa ringgit? 231, below 200 ringgit extra saja, no. So you don't unnecessarily unlock. But to me, for single profile, you can sell, you unlock, you go travel, you don't want to use your FD, you can unlock this, you go and travel. Tapi you don't unlock 61, unlock later. Unlock later, then you can get a bit more. So because you don't bother maturity benefit already. To single, actually, we don't really care about the gift of love to the family. So long, I don't leave debts to my family members, I don't leave debts to my nephew. Example, like my thinking, I don't leave debts, okay? And I use out my money. Where got such a perfect calculations one, I can survive, I can on my own, but the moment I die already, I don't really care how much left behind my nephew, my sisters, they all have. So single mindset mostly like that. They don't care about, I want to have this amount for my sister or brother. Mostly single, don't think like that. Okay. People who have children is different. They want the best for the children. All right. They want the best for the children. Definitely they want to give a lot for the children. Okay. Right now. Yes, can get lump sum. This is optional. Either you get lump sum or you unlock by years. Like I said, unlock by years, not worth it. Not worth it. Very small. Because it pay by monthly basis. Not every month give you 4510. This one 4510, you're gonna every year 4510, tapi you have to divide by 12. Very small. Okay, non-met limit, how does it work? Non-met limit, it depends your sum assured. If you buy 100,000, You have to darab 5, so I consider the normal limit as 500,000. We won't as considered 500,000. Okay, now, this one understand now. You can sell the sum assured unlocked. The logic is you can use this funding for holiday. If in emergencies, you can unlock your sum assured. Otherwise, you can keep until maturity. Yes, you still can get, yes, your retirement income, no impact one, because you are selling off your sum assured to the company. You instead of wait until 90, you get 100,000, you sekarang you want to take the present value. You no change one, okay? You no change one. All right, now, LTC, long-term care rider. Walao, at 11:30 already, I still got a couple of slides. So long-term care rider is basically, in this example, right, if nothing happened throughout the policy, they don't get TPD 3 out of 6, you don't get anything. So the total premium will still give it back to the customer as a maturity. So this rider is worth to attach. So likely worth is the person kena OHTPD, get money, maturity, you still get back the total premium paid. All right, it's worth adding in. This rider, nothing to lose to add in. All right, it's worth getting it because nothing happened, you still get back your premium. All right, if things happen, you still get back your premium, it will live throughout maturity. Okay? Okay, now, why there is a market opportunity, aging populations? Seriously. And we all know that I think we have an increasing aging populations and we have increasing number of people is actually looking at early retirement. So we don't want to talk about early retirement, is about, what are the actions that you're taking for now. You yourself, you're talking about the future you want to take care, is about now, Retirement planning is not about you retire, you borrow plan, that's too late already. When you retire, the money keep safely in the bank, keep safely in EPF and in the bank, lock it yourself. Any investment opportunity to get you high return, this is my urging to all of us. I think all of us here that we need to protect our money is not by greed, okay, by greed of exposing our money to a higher risk. If at retirement you're still exposing risk, I mean to say you don't mind your money will be gone, that is okay. All right. Now, so this actually in the training side I mentioned before, all right, by 2060, 4.4 million new senior, they're growing fast, all right, 3.4 million to 7.8 million, more and more people living longer and need better retirement planning. All right, so I think you and me acknowledge now, one of the market in the future is actually a retirement home, nursing home. These are big business in the future. Seriously, being single, my concern, I told my friend, sekali when we all right, it is about we getting a nice retirement home. We stay there together already. All right, we stay there together, a nice retirement home. All right. So whether you're single or married, retirement home is one of the potential place that we stay in the older ages. Okay. Now, I want to wrap up this before I want to highlight the circular. This part, the key attraction of this plan is because of the guarantee benefits. Number one is guarantee high coverage. Give you 5 times during the working years. It guarantee monthly income during retirement years. It guarantee additional monthly income under the long-term rider. You will double. You buy 100,000 the rider. Let's say you're getting 1,000. OHTPD will give you another 1,000. Instead of 1,000 monthly, you become 2,000. Okay. Then guarantee additional coverage. It will fall under the elder care benefit, and the premium rates are level and guaranteed. So one thing, we are in the world of non-guarantee, ladies and gentlemen. A lot of things are non-guarantee, even a life are non-guarantee. But at least this is a plan that gives us a certain extent of guarantee. Okay, our medical plan are non-guarantee, the rates are non-guarantee. Okay, we all know that the world is keep changing, policies keep changing, the guidelines keep changing. Okay, so this is the only comfort that we can fall in, that we know that we're getting a plan that is actually will guarantee, will give me money when I retire. All right. Now, while serving the premium payment term, if diagnosed TPD means don't pay out, only waive premium. If diagnosed TPD, right, the policy already terminate the payout, because TPD is part of the death benefit, is considered payout already. The policy will be terminated already. Okay. Now, coming up next, I want to talk about the circular we just issued. I think any one of you have read the circular, belum kan? Because you listen to me, you listen to me, you belum tengok circular, right? So can I take the chance to walk through the circular announcement? Anyone want to know about the circular announcement? Okay. Yeah, belum kan? Any one of you read the circular? Belum lagi. Belum lagi. Okay, I want to highlight the circular. We just launched MGC 2.0. Okay. Now this round we select 122,000 new customer, never selected for GIO before, never in the previous level up, never in the value up, never in the MGC campaign in the past, never. So this selected customer cuma ada 122,000 sahaja. Why this customer? These are the customer with low annual limit, and majority of them, 104,000 of them having a current annual limit less than 100,000. Less than 100,000. These are the new leads. So now you can actually go to StarBuddy to check who are your customers and check yourself whether you selected or not. Because these are the people never selected. The previous round, we didn't select customer with low annual limits. So some of you may be selected. These people, we selected them, right? They can buy SHP 20,000, GMV 20,000. Tetapi the annual limit cuma 500,000, cannot 5 million. Cannot 5 million. All right, cannot 5 million. Because majority of them are having a 100,000. 500,000 means that you already have 5 times of your annual limit. So this MGC2 punya customer, their plan still deductible 20,000, tetapi the annual limit is 500,000 and not 5 million. 5 million. So at least these people got a chance to get a GIO additional coverage without medical underwriting. Okay. Now this is how we select the customer. Select the customer claim profile. Moderate claim. These people who have claimed before, meaning to say the claim they have, right? Some of them they are standard, meaning to say they are standard life customer, tetapi they have claimed before. These claim chances that they may recurring, like example, cyst, recurring. Okay. Then we have originally existing balances stated as substandard, we have about 12,000. So these people who are standard, we have 68,000 of them who having moderate claim. Okay. And then people with minor or no claim before, all right, we give them an options to buy SHPE or GMVE. Tetapi those who have claimed before can only buy GMVE. So the moment the customer know it, that the customer who have GMVE saja, that this customer having a moderate claim before. If a customer having SHPE and GMVE, mean to say they're having a minor or no claim. What happened is that this is the existing medical plan renewal profile. Even though they are standard, right? I just want to highlight here. If let's say they come to go through underwriting, even though they're standard now, simply because they have claimed before, their underwriting outcome will have exclusions and loading. This is definitely your number one priority. Number one priority. Because if you propose a plan to them, they underwrite, they either kena loading or exclusion or dua pun ada. Even though they're standard now. You get what I mean? This one, substandard, they may have higher loading or more exclusion. These are your number one priority, meaning to say customer will be selected GMVE. All right. Now, this one, standard, what will happen? They may be potentially standard because they're having maybe dengue claim. So they come in, they buy potential standard, they will buy through underwriting. But why people want to come? Because they want hassle-free, don't want to do medical checkup. Yes, they can come in. So those substandard life, right? If let's say they come through underwriting, potentially will be same loading and same exclusion because they are just having no claim or minor claim. No new findings, they will be like this. So here in your customer listing, have you checked this round? Because 122, most of you will not have many customers because I only have 122 of you. So go and check at the StarBuddy. All right, StarBuddy. Okay, now this is a circular we have announced. MGC2 customer, this period, the moment you see, you support them. All right. Now, they remember MGC2 customer annual limit is 500,000, lifetime limit is no. Standard case in the list, why we can't upgrade rather than sell Medica. You can sell, no, you can upgrade them via new business. You can upgrade them. You can come in because Medicard is no underwriting. We select customer with no underwriting. You can go through underwriting if you want to do an upgrade. Okay. Any link to check with the customer? Yo Ching Yim, can you check with your? I think this link have been circulated. You check with the circular. Circular inside got show. Read the circular got link. Check on the customer. So here, what's the point? The point here I want to highlight to your customers, right? If you want to do a replacement card, we have a difficulty. If you want to do a replacement card, you can do that. Then you need we did that before last year. Tetapi your complaint is what? Effort gone because I only get 20 ringgit. So now we find a way that able to give a top up to a customer. You hold your existing plan. Now you tambah another new business. All right. Now, why should a customer consider this? Number one, we are the newer feature in the plan. Here in the circular mention, we have new outpatient coverage that old plans certainly don't have one. Okay? Old plans certainly don't have. Outpatient imaging, all these withdrawn plans sure tentu tak ada punya. Outpatient treatment, if you buy this one, immediately can use dengue fever, Zika virus, outpatient treatment. This one, the old plans surely don't have one. Post-hospitalization home nursing, this MGC 210 product memang tak ada. Chiropractic, speech therapy, occupation pun tak ada. TCM, medicine practitioner tak ada. Cost of blood tak ada punya. Okay, communicable disease confirm tak ada. Coverage congenital, confirm tak ada the old plan. Okay, we are trying to highlight the features easier for you. Okay, to show that why you should get another plan. All right, why should I get another plan to top up? And the budget is reasonable. Actually, the premium is very low size. This one that you need to do an upselling. You start all the way, see the customer only sell this plan. I tell you, Kuchi Rod, the premium size, because you can see below 2,000, you can buy already. If you see your customers, the premium size is then you pandai, you do for product bundling, you get what I mean? Not you upselling your legacy. If let's say they still can underwriting, okay. If not, pandai, not just go and propose and Medicard saja, also look at the protection needs, the life coverage and everything. If you just go all the way there and meet your customer to do this, right? You do not know how to exercise combinations of holistic insurance advice. So look at the protection needs, the life coverage. Take the chance to look at the coverage as well. Okay. Batch 3, the earlier batch, the previous one, we have 400,000 plus circular. We mentioned we're going to reduce it. So we still have 223,000 people still got chance. So you need to check MGC and MGC 2.0. These are two different group people. MGC punya orang, tinggal berapa orang, you gonna check. Okay, because some customer belum make decision or some of the customer you belum approach, they still can buy. This customer MGC annual limit is 5 million. The MGC 2 annual limit cuma 500,000. Belum upload lah. Batch 3 belum upload. Batch 4 belum lah. Batch 4 tak ada. Batch 3 is batch 3. I think it's batch 3, right? Belum your MGC, you click to StarBuddy, you check MGC and MGC 2.0. Any one of you check already, got or not lah? You go StarBuddy, can anyone feedback? I check the premium almost the same as batch 2. Okay? Almost batch 2, same as premium. It's like about, I think 5 to 10% difference lah, premium. Got. Semua ada, tak banyak kan? How many you have the MGC 2? You prioritize people, this low limit is low hanging fruit, ladies and gentlemen. Imagine the person 100,000, less than 100,000. Now you go after him, GMVE is a low hanging fruit. Only 2. Never mind, use the power of the link. Go and share, go and cari siapa punya. You see, you imagine, right? We have so many customers some agents' actions are slow, some agents' action are fast. So definitely the faster will get the more benefits. So utilize the link to check it out that, some of the customer, you can check it out using the link who are not your customer. You're a Great Eastern customer, you check your link, you use the IC. The same one chosen in batch 2, 205 MCT. Wow, Santana, congratulations, 25, you have a lot. Yesterday, one leader asked me, but any one of you selected in batch 2, any one of you sendiri can buy. Actually, in MGC, right, we have 3,000 agents selected, but they didn't buy, I don't know why. We get the AD to go and find out. You selected, you don't buy. And this one, I don't see any reason why they don't buy. Annual limit 100,000. and then they don't buy. Any one of you not selected lah? Okay, now just want to highlight again. GMV, me finally got GMV. What do you mean, Joe? You selected lah? Are you selected? You got GMV means GMV is you underwritten one. You selected lah, walao, congratulations. Congratulations, okay. Congratulations. You buy or not? You will buy or not? Buy lah. Same as you, no lah. Same as me, I go through underwriting one. Selected, not selected. Anyone who use selected, 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 not selected, not selected. No one selected in this chat. No one selected? Anyone selected? No, not selected. No chance already. Okay. Now, clear, huh? MGC 2.0, 500,000. The MGC is 5 billion. Okay, now. Check already, check already. Okay. Now, here, you see the listing, right? Meaning to say this customer got option to buy lah. You see the premium, most premium is very low. And please update the status. This one is the attention. If your customer got R, you every day you need to check the listing. Company will upload the WhatsApp response. If R, you quickly go and touch, you need to quickly call your customer already. It means that customer respond to company they're interested. Then you need to update, you go follow up or not. We got customer very angry and big call to company. I responded, after 2 weeks already, nobody contact us. So no choice, company have to intervention. Intervention, go and get the agent to contact the customer. Then we send WhatsApp again, the customer asks for, please assign me a new agent. So when you have R, quickly reach out to the customer because they responded to company that they interested. So this is a customer letter. Some people got choice, some people no choice. No choice one GMVE, meaning to say they have moderate claim before. Okay. Now this is the link in case that you save the link in your own WhatsApp you can share the link, okay, in your own WhatsApp. Now the link this time round we have enhanced already. Got show premium some more. Okay, got show premium some more. So you no need, if in case your customer is not your customer, you find out that this customer can buy already, you can advise the premium. All right. The whole Medicard concept is keeping your existing plan, buying an SVY to top up your medical coverage. All right, this is like a power bank, okay, like a power bank. So I'm not going through this. And also this round, we relaunching the GTG. So your customer is actually cannot go through underwriting. Please propose GTG. This is no underwriting life medical plan. You know the 5G, guarantee acceptance, guarantee high coverage, guarantee standard rates, guarantee money back, and guarantee premium break. Pandai, you bundle sekali to propose, but this plan only for 45 years and above lah. Don't just go to edit. You will check this customer cannot go to underwriting. You propose a GTG sekaligus. So sekaligus, okay. Now, this one suitable for all sizes your XS your XXXXL pun boleh. Your all sizes. Okay. Tapi this age I think is 45 onwards 45 onwards, and maturity at the age of 80, you get 108 money guarantee back. So it's a life coverage plan. Okay. Now, this is a high coverage we're talking about. Normal death is 100% basis sum assured. If ADB 3 times. Before 64, 65 onwards 1.5 times accident benefits. All right, maturity you get back. So this is a worth taking product for people who can't go underwriting. All right. Now this is a premium example 45. Okay, maturity benefit, they're getting this. All right. So this is just a sample premium guide. We will have a sample premium share in a group chat. We will circulate. But yes, his birthday is July. Next birthday is July, but next birthday 45. Minimum entry age is 45. This product premium rates are guaranteed and level. The 5G, remember the 5G. This product is really a 5G product. Okay, you know it's no underwriting, means the first 2 years you refund a premium. The 3rd year onwards is maximum basis sum assured and TPP. So in the circular we mentioned you want to find out more, because here I just high level to touch on this now announcement. We have MGC 2 launch. We have refresh batch of MGC, and then we have a relaunching of GTG. So you want to find out more, refer circular. Then we have these sessions to touch again, to walk through again on Medica. Now I lost voice already. Okay, ma. All right. So basically, non-stop or marathon, 1.5 hours, 1.5 minutes. Ladies and gentlemen, so far so good. Do you get a little bit of getting picture? Now, seriously, retirement planning, I understand there's a learning curve, learning curve, but you need to start to do quotations, and I do start to the product, right? Don't depend on learning via virtual. You also need to do the self-learning. All right, need to do the self-learning. But the most important, you understand how the concept works. It's not about how you calculate the values. You're not actuarial, but you present the concept. Many of the times, the presenting the concept, whether the concept the customer don't buy in or not. You're not using the cash value to attract the customers.